The gas says it expects to get permits to start piston core sampling in Jamaican territorial waters by early next year.
Beneath the waters south of Jamaica, according to licensed petroleum geologists, whose findings have been submitted to regulators and signed off by a UK-listed exploration company, there may be more oil than the entire proven reserves of Mexico. 7 billion barrels of prospective resources, in a country that currently imports nearly every drop of the petroleum it burns. A country that spent over $1.4 billion United States dollars on energy imports in a single year. A country where electricity costs rank among the highest in the Western Hemisphere. A sitting cabinet minister recently told the Jamaican public there had been no oil discoveries in Jamaica. That statement is accurate. No commercial discovery has been confirmed, but an active exploration program is underway. A licensed company is advancing towards seabed sampling in Jamaican territorial waters. The early geological data has been compelling enough to justify years of investment. None of that was mentioned. This documentary examines what the geological record shows, who holds the exploration rights, what the government's conduct reveals about Jamaica's institutional readiness, what the Caribbean's most instructive resource histories have in common, and what the terms of any eventual oil contract will determine for ordinary Jamaicans, particularly the 4 million members of the diaspora who already fund the country through remittances. Jamaica's southern offshore territory sits above the Walton Morant Basin, a sedimentary formation that geologists have studied for decades. To the north of the island lies the Cayman Trough, one of the deepest points in the Atlantic Basin. To the south, the Caribbean plate meets the edge of the North American plate, along a tectonic boundary that has been active for tens of millions of years. At convergent plate boundaries over geological time, organic material, microscopic organisms, algae, and other biological matter accumulates in sedimentary layers, gets buried under pressure, and converts through heat into hydrocarbons. The structural geology of the Walton Morant Basin carries several of the same indicators that have accompanied commercially viable oil deposits elsewhere in the Caribbean. Seismic surveys, conducted by sending acoustic waves into the seafloor and analyzing the returning echoes, have been carried out in this basin. The data from those surveys is what attracted United Oil and Gas, the UK-listed company that holds the current exploration license. Based on that seismic data and regional geology, their technical team published a prospective resource estimate of 7 billion barrels of oil equivalent. The distinction between a prospective resource estimate and a confirmed reserve is important. A prospective estimate is a calculation of how much oil could theoretically exist in a given area under favorable geological conditions. It is not a production figure, and it is not a confirmed find. It is the technical basis on which a company decides whether further investigation is commercially justified. For United Oil and Gas, the data justified proceeding. The Walton Morant license area covers approximately 12,000 square kilometers of offshore territory, an area roughly equivalent to the surface area of Jamaica itself. The first technical step in their exploration program is piston core sampling. The process involves driving a long hollow steel tube into the seafloor sediment and extracting a core of material representing layered geological history. That core is then analyzed in a laboratory for geochemical indicators of hydrocarbon migration. A positive result does not confirm the existence of a commercial reservoir. It establishes that oil has been present in the area and that the conditions for further investigation are met. United Oil and Gas indicated that it expected to receive the necessary permits to begin this sampling in early 2025 and described the permitting process as well advanced at the time of that statement. Progress on the program has since been limited in what has been communicated publicly. United Oil and Gas is listed on the alternative investment market of the London Stock Exchange, which is the segment of the UK market that accommodates smaller companies with higher risk profiles than those listed on the main exchange. They are not a major integrated oil company. They are an independent explorer that acquires rights in underexplored basins, conducts early-stage technical work, and advances exploration programs that the international majors have not yet committed to. The company has operations in Egypt and Italy, where it has progressed from exploration into early production. It is not a shell entity, but it operates with the capital constraints typical of companies at its scale, which means that timelines are dependent on funding cycles and that larger expenditure milestones require external financing. Piston core sampling, while straightforward relative to well drilling, still requires vessels, specialist technical crews, environmental permits, and logistical coordination. The more capital-intensive steps that follow, gravity surveys, additional seismic acquisition, and ultimately the drilling of an exploration well, carry significantly larger price tags. A single offshore exploration well in Caribbean conditions can cost between 50 and 150 million United States dollars. That expenditure level exceeds what United Oil and Gas would fund independently. The standard mechanism for bridging that gap is a farm-in arrangement. A larger company acquires a percentage interest in the license in exchange for contributing to well costs. Securing that farm-in partner is the central commercial challenge of the program. Favorable technical results from the sampling phase would substantially strengthen those discussions. The permitting delays that have extended the timeline before sampling has even begun, therefore carry a direct commercial cost. Every month without sampling data is a month without the technical evidence needed to advance farm-in negotiations. Jamaica's Petroleum Act governs offshore exploration and production. The Petroleum Corporation of Jamaica administers the regulatory framework and was the issuing authority for the Walton Morant license. The Jamaican government, as the sovereign authority over the country's natural resources, has a direct institutional role in the success or failure of this program. That role has not been played constructively. Cabinet Minister Darrell Vaz stated publicly that there had been no oil discoveries in Jamaica. The statement was factually accurate in the narrow sense that no confirmed commercial discovery has been announced. But it was made in a context where the public question was not about confirmed finds. It was about the active exploration program, the status of permitting, and the potential significance of the prospective resource estimate. On those subjects, the minister offered no substantive information. The international investment and energy sectors pay close attention to how governments in frontier exploration countries frame their resource narratives. A senior minister treating the absence of a confirmed discovery as a basis for near silence on an active exploration program sends a signal that the country is not engaged with the process. That signal reaches the people United Oil and Gas needs to have farm-in conversations with. Understanding why the government has adopted this posture requires understanding the institutional damage caused by the Petrojam scandal. Petrojam is Jamaica's state-owned oil refinery. A government-commissioned audit found systemic irregularities in its operations, inflated procurement contracts, questionable personnel decisions, and unaccounted public funds. Senior officials resigned. Criminal investigations were initiated. The damage to public confidence in government management of energy sector entities was significant and has not been fully repaired. The consequence for the current exploration program is that any ministerial engagement on the subject of oil arrives in a media and public environment primed for skepticism. The government's response to that dynamic has been to minimize public engagement rather than to address it through transparency. That approach reinforces rather than resolves the credibility deficit it was intended to manage. Two regional cases provide useful reference points for what Jamaica could build and what it needs to avoid. Guyana's offshore oil development is the more recent and more dramatic example. ExxonMobil announced a significant discovery on the Stabroek block in 2015. Subsequent drilling extended the estimated resource base to over 11 billion barrels of oil equivalent across multiple fields. First oil was produced in December 2019. By 2023, Guyana's GDP was recording annual growth rates above 30%, among the highest of any economy in the world at the time. A sovereign wealth fund, the Natural Resource Fund, was established to manage long-term oil revenues. Infrastructure investment accelerated across multiple sectors. Guyana is also a cautionary example on contract terms. The initial production sharing agreement signed with ExxonMobil in 2016 has been a subject of sustained national debate. Critics argued that the profit oil split was too favorable to the operator and that the state's share of revenues was inadequate relative to the resource being extracted. The government has since sought renegotiation on elements of the arrangement, but the terms as originally signed remain the operational framework. The episode demonstrates that the leverage a host government holds in contract negotiations is concentrated in the period before a commercial discovery is confirmed. Once that confirmation is in hand, and a major operator is present at the table, the balance of negotiating power shifts. Trinidad and Tobago has been an oil and gas producer for over a century. Its energy sector funded the construction of the country's public infrastructure and supported social spending across multiple decades. But successive governments treated oil revenues as a reliable recurrent income stream, rather than a finite resource to be reinvested in long-term economic diversification. When commodity prices declined and mature fields began to deplete, the public sector, sized and structured around boom-era revenues, faced fiscal pressures it was not designed to absorb. Trinidad's current economic position reflects the long-term consequences of that approach. The structural lesson from Trinidad is that resource revenues must be ring-fenced and invested, not consumed. The mechanisms for doing this: sovereign wealth funds, constitutional spending constraints, mandatory diversification targets, caps on the percentage of resource revenue that can fund current government expenditure, are well documented. The countries that have applied them have built durable foundations. The countries that have not have found that the resource decade, however prosperous it appears in real time, eventually ends. The production sharing agreement or license terms that govern the Walton Morant block have not been made public. This is a meaningful gap in the public record. The terms of the license determine the royalty rate payable to the Jamaican state, the profit oil split between the operator and the government, the work program commitments the company is obligated to complete, and the local content requirements, if any, that would direct employment and procurement toward Jamaican workers and businesses. The financial stakes involved make these terms consequential at a scale that warrants public scrutiny. The difference between a well-structured and a poorly structured contract in a basin with a prospective resource estimate of 7 billion barrels is not marginal. Over the producing life of a field, the fiscal terms determine whether tens of billions of dollars flow into Jamaican public revenue or flow out to the company and its shareholders. No informed national debate about Jamaica's oil future can take place without access to this information. Guyana's experience is again instructive. The terms of its production sharing agreement with ExxonMobil were eventually obtained and published under pressure from civil society organizations, journalists, and opposition parliamentarians. That publication generated exactly the kind of rigorous public and legislative scrutiny that such an agreement demands. Jamaica has not yet had that debate. The license terms have not been published, and no public mechanism has been proposed to ensure that any future contract would be subject to parliamentary review before signature. The window in which that debate can most effectively influence outcomes is now, before any commercial discovery has been confirmed and before a major operator has entered the picture. Once those conditions change, the institutional framework for managing the revenue will need to be retrofitted rather than designed in advance. The resource curse is a documented pattern in development economics, not a theoretical abstraction. Across a wide range of countries and decades, the discovery of significant natural resource wealth has been associated with slower economic diversification, weaker institutional development, higher rates of corruption, and greater political instability than would be predicted by the scale of the resource alone. Venezuela's trajectory is the most severe example in the Western Hemisphere. The country holds the world's largest proven oil reserves by most current estimates. Its economy was among the wealthiest in Latin America during the peak production and high price period. Since 2013, GDP has contracted by over 70%. A large share of the working-age population has emigrated. Essential services, including healthcare, have deteriorated severely. The oil revenues that accumulated during the boom years were channeled into a political economy that crowded out private sector development, undermined institutional independence, and left the country with no viable economic base when production declined and prices fell. Nigeria has produced over 40 billion barrels of oil since commercial extraction began in the 1960s. The revenues generated were sufficient, in principle, to have built world-class public infrastructure and supported high levels of human development across multiple generations. The outcomes have not matched that potential. Corruption, inequitable revenue distribution, environmental degradation in oil-producing communities, and chronically underfunded public services that has generated enormous resource wealth without converting it into broadly shared development. The pattern is not universal. Norway established the Government Pension Fund Global in response to North Sea oil revenues, creating what is now the world's largest sovereign wealth fund, with assets exceeding $1.5 trillion United States dollars. The fund operates under strict rules that limit how much of its returns can be drawn into the annual government budget. Norwegian oil revenues were not consumed in the year they were generated. They were converted into a permanent institutional asset. The common factors in successful resource management are well-established, transparent, and independently audited revenue flows, a constitutional or statutory framework that constrains discretionary spending of resource revenues, investment mandates that require a defined proportion of revenues to be directed toward long-term productive assets, and institutional independence in the bodies that manage and audit the funds. Jamaica does not currently have any of these frameworks in place in relation to a potential offshore oil revenue stream. Establishing them before a commercial discovery is confirmed is the more tractable option. Retrofitting them after discovery, when the political pressures around resource revenue are at their most intense, is considerably harder. The Jamaican diaspora is a dimension of this story that the domestic policy debate has not adequately addressed. An estimated 4 million people of Jamaican origin or descent live outside the island, in the United Kingdom, the United States, Canada, and elsewhere in the Caribbean. That is approximately 1.5 times the current resident population. They transfer approximately $4 billion United States dollars annually to Jamaica in remittances, a figure that exceeds annual tourism revenue and constitutes the largest single source of foreign exchange entering the country. Members of the diaspora pay Jamaican utility bills, fund housing construction and maintenance, support family members through education and healthcare costs, and sustain a significant portion of local consumption. Any durable improvement in Jamaica's macroeconomic foundations, including a well-managed oil revenue stream directed toward public services and infrastructure, would alter the conditions that make remittance flows necessary at their current scale. The diaspora has a material stake in how this is managed and, through advocacy and political engagement, a role in influencing how it unfolds. As of the most recent publicly available information, United Oil and Gas was at an advanced stage of the permitting process for piston core sampling in the Walton Morant license area. No public announcement had been made confirming that permits had been issued or that sampling operations had begun. The permitting process involves review by the Petrojam Corporation of Jamaica and relevant environmental regulatory bodies. Delays in this process are not uncommon in offshore exploration jurisdictions, particularly where environmental impact assessments are required before any seabed intervention is permitted. The timeline of the program will ultimately be driven by the pace of regulatory decision-making, the technical results of the sampling phase, and United Oil and Gas's success in securing the financing or partnership arrangements required for the subsequent exploration stages. The external financing environment is a relevant variable. Global oil prices have been subject to volatility driven by the Russia-Ukraine conflict, production decisions by the OPEC Plus group, and ongoing uncertainty about the long-term demand trajectory as energy transition policies develop in major consuming economies. Price volatility generally reduces risk appetite for early-stage frontier exploration investment, which affects the terms on which farm-in discussions can be concluded. The actions available to the Jamaican government that could improve the probability of a positive commercial outcome include publishing the license terms, reducing administrative delays in the permitting process, building technical and regulatory capacity within the Petrojam Corporation, and initiating a formal legislative process to establish a sovereign wealth framework in advance of any production phase. These steps would not guarantee a commercial discovery. They would establish that Jamaica is a jurisdiction prepared to manage one responsibly. Jamaica may hold one of the Caribbean's most significant untapped offshore hydrocarbon resources. The geological basis for continued exploration is substantiated. The exploration program, while delayed, is not abandoned. The prospective resource estimate, while unconfirmed, is material. The trajectory from here, whether the program advances toward a confirmed discovery, and whether any resulting revenues benefit ordinary Jamaicans, will be determined by institutional and political decisions, not geological ones. The geological work is the precondition. The governance framework is the determinant. The oil does not make a country prosperous. The institutions do. The contracts do. The decisions made before production begins determine the distribution of what is extracted. Guyana engaged with those questions during the exploration phase, however imperfectly, and created at least a partial institutional foundation before revenues began to flow. Venezuela deferred them until after the revenues were already embedded in a political economy that could not function without them. Jamaica has not yet made the foundational decisions. It has time to do so. The decisions are political, which means they respond to organized public demand. The diaspora, civil society, the media, and the parliament all have roles to play in ensuring those decisions are made in the public interest before the window to make them on favorable terms has closed. Caribbean Journey covers the infrastructure, resource, and governance stories across the Caribbean and Guyana, with sourced reporting, named references, and analysis oriented toward the facts. If you are not yet subscribed, subscribe now. We are working toward 10,000 subscribers. Share this documentary with anyone, in Jamaica, in the diaspora, or elsewhere, who has a stake in how these questions are resolved. A question for the comments. If Jamaica confirms a significant offshore discovery in the next 3 years, do you have confidence that the current political and institutional environment would manage those revenues in the public interest? If not, what specific institutional changes would need to come first? This is Caribbean Journey.